Welcome to the Cherry Beckert Tax Beat, a conversation about tax that matters.
Welcome to this edition of the Cherry Beckert Tax Beat podcast. Today we're talking about a tax deduction for creating energy efficient commercial buildings. Section 179D of the Internal Revenue Code was significantly enhanced by the Inflation Reduction Act of 2022, also called the IRA. We're going to spend some time talking about this provision and why it's gotten a lot better under this new iteration. So joining the conversation are two colleagues from our tax credits and incentives advisory team. I got Bill Harbeson and Andre Kohn. So Bill, why don't you say hello here?
Hi, everybody. Thank you so much for having me, Brooks. Looking forward to our conversation today.
And where are you sitting today, Bill?
I support our Austin office down here in Texas.
All right. And let's see, Andre. Say hello, Andre.
Brooks, Sarah, thank you so much for having us. Likewise, support the Texas area, supporting Austin, but down here in Houston, Texas, where it is 122 degrees.
What?
Wow.
Good Lordy.
It's hot, yes.
That is very hot.
Good to have an indoor job.
Yeah. Up here in North Carolina, Virginia, it's been an unusually mild spring, unusually mild. So been very pleasantly surprised at cooler temperatures than usual. So anyway, all right. Also joining me today, my partner in crime, as always, Miss Sarah McGregor from Greenville. So Sarah, how's life treating you?
Life is good. Unfortunately, this is one of the longest days, most sunshine of the year, and we've got clouds and rain. So I'm a little disappointed in that. But other than that, these are my favorite times of the year when there's plenty of sunshine all day long.
Yeah, we've also got this rainstorm. Now, I was supposed to be going tonight to an outdoor concert that got moved inside. I was so looking forward to it, and now not so much. But anyway, it'll still be good. All right, so let's move on with our Section 179D conversation. As with many of the clean energy credits and incentives, the Inflation Reduction Act / IRA, which I will probably be referring to it that way for the remainder of this conversation, enhanced and expanded the 179D energy efficient building deduction. This incentive rewards building owners, architects, engineers, system designers, all sorts of people for engaging in energy efficient construction of commercial buildings. So let's just move on in. So Bill, Section 179D is not new. It's been around for a while, correct?
Absolutely. When I talk to people about this, and I've had the opportunity over the years, I've been doing this for about 8 years now, I've had the opportunity to talk to probably 1,000 taxpayers. And almost every time the 179D incentive is news to them. So it's a surprise to most of them to hear that it's been around for almost 20 years. It's going back all the way to 2005. It's received a lot of expansions, extensions. It's now permanent, thankfully. Over the years, notably 2008-40 allowed for a broader range of people to claim the deduction, and even more expanded under the Inflation Reduction Act, which of course we're talking about today. So nothing new for us, certainly.
Right. So Bill, when you talk to people about this incentive, how does it work? What's it all about?
So great question. The full name of the 179D deduction, and you'll have to forgive Congress and the Treasury for not being more creative with these names. It is the Energy Efficient Commercial Building Deduction. And while that seems kind of like a mouthful, what it does is incentivize, as Brooks mentioned, the design and construction of energy efficient buildings. We focus on three main systems within those buildings: the interior lighting, the HVAC and hot water systems, so they kind of bunch those together, and the envelope systems, that is the fenestration, the roof, windows, insulation, etc. Those three systems make up the majority of an energy draw for a commercial building. So what allows for is for a company, a building owner, to claim up to $1.80 per square foot for an eligible space. And that $1.80 does change throughout the years, and I'm sure we'll talk about that more here in a little bit. But as far as what it focuses on are those three things. So one thing I want to incentivize, or excuse me, highlight here is that when we talk about energy efficiency, we are comparing to a pretty old standard. So if you're thinking to yourself, well, we build to minimum code standards, we're not looking for the most efficient thing out there. We're comparing to a very old standard, 2007, so to be specific. So going on 15 years old of what's considered energy efficient. So again, if you're out there thinking about your building, it is almost certainly falls within the definition of energy efficient according to the IRS right now.
So you don't have to have solar panels and a windmill on the side to qualify, is what you're saying.
Absolutely not. Now, if you do, we've got even more incentives, and I'm sure that's a topic for a later conversation. But we got you covered. It's certainly going to make things better. But as long as you're meeting the requirements, you're building to your local codes, you're almost certainly going to qualify.
Right. All right. So Andre, some of us got really excited by the IRA revisions. So why don't you tell us about what they have done to make 179D all that much better?
That's right, Brooks. So they have reason to be excited because our congressional leaders found that 179D and many other incentives are still underutilized. And last year, the Biden administration, via the Inflation Reduction Act, applied some beneficial changes to 179D. So as you know, Brooks, our advisory team has collectively completed hundreds of millions of dollars in 179D studies for our clients. But I want to first discuss just a few scenarios that we've seen over the years under the old 179D law that made the program not so beneficial for taxpayers who in fact qualified, and how the Inflation Reduction Act solves those problems. So first, imagine a design firm having a large portfolio of strategically energy efficient construction projects that were owned by nonprofit, non-government, tax-exempt clients. Under the old law, those design firms with these sorts of portfolios would not be able to participate in 179D. Now, the way that the Inflation Reduction Act solves that problem is by now allowing non-government-owned tax-exempt entities such as private colleges and universities, religious institutions, nonprofit organizations, and tribal lands to allocate that 179D deduction to designers. So number two, imagine being a design firm with sound relationships and residual business. You completed a project and taken 179D on it, but that was 3 or 4 years ago. So under the old law, 179D can only be taken once. The way the Inflation Reduction Act solves that problem is by allowing for a triennial reset every 3 to 4 years, as so long as there's been an addition or substantial renovation to the building. They can take that 179D deduction again. Next, imagine a small firm that completes just a few projects per year, but they're large projects. So you may not see the benefit of exploring 179D if your 100,000 square foot building only gets you $188,000 in deductions under the old law. So the Inflation Reduction Act increases the maximum deduction up to $5 per square foot when the building is placed in service in 2023 and forward. So that same 100,000 square foot building, when meeting all requirements, is now up to $500,000 in tax deductions. So there were also some changes in how the deduction is calculated. There's no longer partial deductions. The energy analysis is still, thankfully, we're going to use, as Bill mentioned, ASHRAE standard 90.1-2007. So that's a fairly old standard. So to achieve the bonus deduction at 25% energy efficiency, $2.50 a square foot. And once you achieve the 50% or greater energy efficiency, up to $5 a square foot. Lastly, and I know there's quite a few changes under the Inflation Reduction Act team, in order to achieve the maximum deduction of $5 a square foot, Notice 2022-61 does require apprenticeship hours and prevailing wages. So there's a percentage of the project that must make up of the total hours spent assigned to an apprentice, and SAM.gov produces the requirements for prevailing wages for where the project is located.
Follow Andre up and say that these new requirements for these quote bonus deductions are not unique to the 179D incentive. You're going to see throughout the Inflation Reduction Act these new prevailing wage and apprenticeship program requirements. So what Congress has realized, among other things, with the help of the Inflation Reduction Act, is that skilled tradesmen the numbers are dwindling. People are getting out of the craft type of careers, such as laborers, HVAC installers, pipe fitters, things like that. And so by encouraging companies through this incentive and others like it to pay prevailing wage, of course, to their laborers and mechanics, but also encouraging apprenticeship programs, the idea is to help bolster these trades groups. So you're going to see these a lot. For instance, to claim solar credits now, you'll be required to pay prevailing wage and meet apprenticeship program requirements as well. As Sarah, as you mentioned earlier, it's nice to have an indoor job. I actually used to be a HVAC installer and started as an apprentice in Galveston, Texas, and that's when I decided I was going to go to college and actually be on the HVAC. So this is a program that is dear to me and something that I really believe in, and I'm glad that we're seeing it attached to some of these incentives. But again, 179D is just one of the many.
Great. And Andre, I was pleased to hear you talk about that you can use this incentive not just for new builds now, but for as a retrofit or updates to existing buildings.
Correct. So as I mentioned before, 179D could only be taken once. That did include renovation projects as well. But just with the Inflation Reduction Act, having that triennial reset every 3 or 4 years, clients are able to revisit those projects as long as there was, an additional renovation or addition to the building.
So if I need to add like a new HVAC system throughout the building 10 years after the first one or 20 years after the first one, if it really increases efficiency in that building, I might be able to qualify again for these credits. For this incentive.
Correct.
Well, so
correct.
There's one part that I want to really highlight in that. No, you do not need to substantially increase the efficiency of your building. You do not need to prove that you're substantially reducing energy costs. What we're looking for is a comparison to a very old standard. So yes, if you're doing some sort of upgrade, you're putting in a new HVAC system, replacing your LED bulbs, you're putting new low E windows. We do not need to prove that you're dropping your energy bills, only that you're doing those improvements and that they beat that old standard from 2007. So again, if you're listening, don't think, oh man, I need to be putting in the geothermal systems and saving a bunch of money. It is this better than what I could put in 2007? And if the answer is yes, and it always is, we can pursue a deduction for you.
All right, so Andre, this is a tax podcast, so I do want to go at least on the other side. Do I get this deduction for free, so to speak, from a tax side, or do I have any kind of negative tax implication I have to deal with in the future?
So there is a recapture of the deduction that would work similar to any sort of deduction, maybe like a cost segregation study. So for the depreciable basis that is taken out, there is that recapture on the back end if the building is sold or otherwise disposed of. So
I guess in my mind, theoretically, this is acting in many ways like a cost seg that you just mentioned. You're accelerating more or less a depreciation deduction up front. You're allowing to grab a ordinary deduction of your basis immediately, and obviously to the extent you sell or trigger some kind of taxable event later, that comes back just like any other depreciation. Sarah?
And Bill, with this, because Brooks was saying and Andre was saying this is like a depreciation deduction, you can look back in prior tax returns if someone has not taken the 179D deduction and help them get that. It doesn't all have to be a new first-year credit, does it?
Sarah, I'm glad you brought that up. Yes. So we can go as far back as when the 179D incentive was implemented, which is 2006. So if you have built a building, refurbed it in some way, going back all the way to 2006, we can calculate a 179D deduction for you. Now, obviously, the returns are going to diminish as time goes on. So the sooner that you can bring this up with your 179D provider, the better. But yes, we can go back. You will not need to amend a return. We would recapture that, do what we call like a catch up using a form 3115 to apply those deductions to the next time you actually file your return. So yeah, we can go back quite a ways.
Great. So Andre, can you share an example of a client situation that has benefited from 179 and kind of walk us through how that works?
Sure. So Sarah, there's two sorts of examples that I was thinking of, and one is just from a few years ago. I remember visiting a client in Kansas City, Missouri, and we were walking through his brand new state-of-the-art facility. And I remember him pointing out to me, he, kind of leaned over and whispered, he said, Andre, last year's deduction study paid for this entire construction project. So that's when I knew that, we were doing work that matters. And it was just really cool to see the immediate impact that this program has on our clients' bottom line. And another example, a recent project that we completed, or a recent study we completed for an architecture firm in Memphis, Tennessee. So all their projects were placed in service in 2022. So there was a total of 8 buildings. We were able to achieve an average deduction of $1.84 per square foot for a total deduction for their entire study of a little over $1.4 million.
But if you'd done that study in this year, you've been able to close to triple it, I assume?
That's correct.
And that my math being going from that $1.80 you mentioned to the now $5. So, all right.
Pretty substantial improvement.
Yes, big time.
So, Bill, can you walk us through the process you guys use for helping a client qualify for these incentives?
Absolutely. So Sarah, I'll tell you that the 179D incentive is fairly unique in how it's done, how it's calculated. Whereas a lot of credits, such as like the solar credit, it's a straight percentage of dollars spent in a fairly straightforward calculation. This one requires a lot of specialized personnel, software, and processes. It's the only deduction of its kind that I'm aware of that must be certified by a professional engineer, and I'll mention that part of the process here in a little bit. So the way that the study is conducted, these are the few key steps. So first off, we'll gather any information that we can about your building. We will gather any drawings that you have, certainly pay applications, any kind of again, information that's been generated throughout the lifetime of the building about what's in it, the equipment that's in it, the kind of windows that there are, the kind of HVAC systems, things like that. From there, we will evaluate the building using our energy modeling software with our in-house energy modelers. The way that we do it is we will construct a building, your building, as it exists today, or as it will exist following its planned upgrades, construct it in our energy modeling software, including all of the components of the building, and then we will run it for 365 hypothetical days. We will then build that same building in our energy modeling software to ASHRAE 90.1 of 2007 standards. So as if the exact same building had been built back in 2007, we will again run that for 365 hypothetical days. We will then compare hypothetical energy costs, and depending on the hypothetical energy cost savings per year calculated, we can then calculate a deduction based off of that, with again the maximum being a 50% energy cost savings, yielding a $5 per square foot deduction. From there, we will then conduct as required by the tax code, an inspection with a licensed engineer, professional engineer from our team. They'll actually go out, review the building, ensures that the building matches the energy model, certify that it does, and then certify that the model is correct, that the deduction calculated is correct, and that the energy efficient features in the model are actually in place and in use in the building, and then again certify that, put their stamp on it, sign it. From there, we will actually then do the tax part of it, where we actually calculate the deductions, how it's going to impact the taxpayer, and prepare the necessary forms, which are fairly new to 179D, just extended here in the past 6 months or so. They added that requirement. So we'll do those new forms and then assemble our final reporting and send that to the taxpayer. So, again, a fairly complex process requiring a lot of specialized people, but that's something that we all do in-house. A final component, or not a final component, but an additional component that we have to include is in the instance where we are talking to an architect, an engineer, contractor, et cetera, that's actually going to pursue these from their tax-exempt clients, as Andre mentioned, governments, post offices, military bases, high schools, but also churches, nonprofit hospitals, things like that. We have to get the owner's permission to actually conduct a study. They have to what's called allocate that deduction. So part of the process is that we will reach out to them on our client's behalf, on the taxpayer's behalf, communicate with them, educate them about the 179D incentive, how they can participate, how our clients qualify, and then coordinate both their allocation of that deduction as well as the required inspection. And we do that for all of our clients that are working with tax-exempt entities.
All right. Well, although there was a lot of hypothetical stuff going on in there, I think the main highlight in my mind is, the tax deduction is very lucrative. And I think, as Andre was saying, it can practically finance some projects with the tax benefits in and of itself. Not all of them are going to be that great, but certainly can make a big dent in the basically the upfront cash needed to finance the project. Okay, let's move on to final comments. So we'll start with you, Andre. You have any final thoughts you'd like to share?
Yeah, well, I just want to thank you all for your time today, anyone who's listening as well. I think it would just be important to keep in mind that for us, at least, no project is too small for us to consider. We definitely love to assist you with any of your 179D needs. So please reach out.
Well said. Well said. All right, Bill, how about you?
So if it wasn't obvious already from Andre and I, we love talking about this stuff. So if you're listening to this and you've got any kind of questions, if there is any realm where this incentive could be right for you, please reach out. This is what we do. Education awareness is the majority of our job. And as I said, most people have never heard of this before. So the opportunity to talk to either a building owner or somebody in the building sciences, architects, engineers, contractors, et cetera, that are building buildings, you'll more than likely qualify, and we'll help you determine if that's the case and send you on your way. So Brooks, thank you so much for having us. Sarah, thank you much for having us, and look forward to hearing from all of you. All
right, Sarah.
I'm always interested in learning something new when I hear about incentives like this. I'm glad there's a little piece of tax on the end of this whole process, but clearly it involves skills in engineering and science and understanding building and construction and the energy standards and building standards. But I also liked that I heard that tax exempt organizations, government organizations can benefit from this, even though they're not taxpayers of their own right. They're able to take advantage of this by swapping out that deduction to their architect or contractor in exchange for some savings on the building costs themselves. So I think that's a win-win for everybody.
For myself, I'll echo a little bit about what Sarah said. I mean, the amount of expertise needed to do this analysis is pretty high. You got to have the engineering expertise. You got to have tax expertise. And I also will say this curveball of the prevailing wage and apprentice program requirements, that's no walk in the park to work through those issues as well. And that requires some definite experience, I think, on how to tackle that. So all this is, really wonderful stuff for a great tax benefit. And I guess I will just throw out my last semi-advertisement. By using our group, you get a free scope. So there's really no cost to get a look and see, how much would it cost versus how much you benefit. And in our firm, at least, because we're doing it in-house with our own experts, we can generally double that up with taking a look at a cost seg potential at the same time where relevant. So I think that's a wrap on today's discussion about Section 179D for energy efficient commercial buildings. Thank you for listening in. A quick disclaimer that we are not providing tax advice on this podcast. Please consult with your tax advisor, hopefully at Cherry Beckert, with your specific tax issues or to discuss information from today's podcast. Check out the firm's website at cbh.com for the latest guidance and materials on this and other tax and business topics. This concludes today's podcast. Please like, share, and subscribe. Thank you, Andre. Thank you, Bill. And thank you, our listeners, for spending your time with us. We truly appreciate it. Let's call it a day and go forth in peace.